Hey traders, this is Ron Haidt at Financial. I hope your new year is off to a great start. This is the market outlook for the week ahead. Okay, now, the S&P. This is a daily chart of the S&P 500. We have a couple lines here. The red one is the one that's least significant right now. It's the 20-day EMA. Just forget about it. I want you to focus on the orange, the white, and the yellow. Those three are the institutional moving averages. And if a stock or a market is above all three, they're viewed as bullish. Primarily, we'll use the 50-day and then the big one, the 200-day. But because the 100-day, which is the third and least followed of the three major institutional moving averages, it's actually been acting as an inflection point. We want to pay attention to that. So I'm going to leave that on here for a while. And once it becomes less relevant, at that point, I'll drop it back off the chart. So right now, the S&P on a daily basis, look where we are. We're up here. In fact, I'm going to just move that over. We can see it a little better. We're all the way up here. And then if I take you to a weekly chart, let's do 3-year weekly, you can see we're sitting up here too. Now these become period moving averages, 50, 100, 200. We're above everything. In fact, the 20 on the weekly is actually acting as support as well. Right here, bulls have the edge on the daily charts, on the weekly period. If we go to the Qs, remember how I said we had this, the 100 days actually acting as the lower line here, and this was the trend line. We got above it on Friday. This could be big. So many folks are discounting the ability, the power, the money that's going to be thrown at this market this year. We're now seeing interest rates on credit cards potentially being capped at 10%. We're seeing rebate checks, stimmy checks that are going to be coming out. Lower taxes. All this stuff is going to end up stimulating the economy. And then lower interest rates. We can argue that are those things needed or not, and that's fine. I don't want to get into the politics of it, but they're going to throw the kitchen sink at this market is what I'm thinking, and what we're hearing, if you will, on the news events is the same. And I think people are underestimating this. They've underestimated earnings. If you remember back in July, post-tariffs, I told you guys they were going to blow them away. Everybody got caught up in the sky is falling. And what happened? Blew it away. October, blew it away. Now here comes January. They're going to beat it again. I don't know if they're going to blow it away as much because now folks are starting to bring their numbers up. But I would be shocked, very surprised if they don't beat again. And I think that's going to lead to another bullish move. If that all backfires and something then says we start seeing earnings and that is not the case, what we want to focus in on, whether it's the spiders, the Qs, the Dow, whatever it might be, watch the 50-day for the first sign of trouble. So I want to stay positioned, if you will, from a bullish perspective. And I have bullish positions open in my real money account. That's how I want to look at this market, and we're seeing things break out. So it's all following, quote, the theory and the plan. But if we lose the 50, then we quick go to 100. If we lose the 100, which was arguably twice support now, then that is the change in sentiment in trading. Those are the things I want you to just keep an eye on, and it's what I keep an eye on. How about the Dow? Fresh off new all-time highs this week. You go to the mid-caps, MDY, this is considered higher risk. They are breaking out. If you go Russell, which I'm long TNA, this thing is now breaking out. These are the higher risk indexes, and they are breaking out. They're confirming what we're seeing on the charts, and it's why I want to remain bullish. Now you go to the semis. I'm personally long Soxel. Look what the semis are doing. Breaking out. Well, if the semis are leading the Russell and the mid-caps, and all these things are going up, it tells us that the appetite for, quote, risk on is there. They want to be long stocks. They want to be long stocks into the weekend versus selling into the weekend. All this puts together the bullish picture, or confirms the bullish picture that we see on the stock charts. If we go IYT, how are the trannies looking? 1 year, they're sitting at highs there. That is also good. How about the banks? They're stair-stepping after playing with the 200-day. They're just stair-stepping. This is all still bullish. If we go to individual stocks, and remember, earnings season is going to start to, we're going to have a couple this week, then the following week we really start to get into gear. One of the stocks that people ask me about a lot to watch these, and if you ever want me to analyze a stock of your own, it would be purely from a technical basis, just send me an email. It's care@financial.com, and I can throw it in here if I have time for the next video. And typically I usually do these on Sundays. Sometimes I'll do them on Wednesdays as well for a midweek update. But one I'm getting asked about is Meta, and it's Mag 7. And the question comes in, well, the Mag 7, like NVIDIA or Meta, they're not leading the markets higher. And is this a problem? The answer is no. This is actually okay, super healthy. Why is it super healthy? We now have the laggards, which were the mid caps and the small caps, playing catch up. So if they think the economy is going to be doing better, they would not be buying these things. and then the semis are leading, bullish. But why not Meta? It needs time. Why not Nvidia? It's okay. It's had an amazing run. It's biding time. So that, from an overall market health perspective, it's actually more bullish. The fact that we're having this rotation and the markets remain at their highs, and it's not Mag 7 that's leading, if you will. So here is Meta. What would I watch on Meta specifically? Look at this 200-day moving average in yellow. Once we got below it on the earnings drop, could not get above it. Could not. We actually closed above it here, but then you had the 50-day in orange and the 200-day in yellow acting as confluence, double resistance. Smack that sucker right back down. I'm thinking this was just a blip, a bad trading quote. You come up, 1, rejection, 2, rejection, 3, rejection, 4, rejection. You now know as a trader, from a technical perspective, where is that line in the sand? It's the 200-day. It's pretty clear. I would go bullish on Meta from a technical perspective above the 200. Probably, if it happens quick, there's space from the 100, but once it's above the 100, you're talking gap fill. If Mag 7 also ignites, I mean, then we are in true melt-up mode. Personally, a slower move in Mag 7 while the others melt up is better, I would, in my opinion. But if they all go, then it's just, now they're throwing money at everything. Because you could say and argue that, well, because Mag 7's not going, your Metas, your Nvidias, etc., your Apples, that money is now moving. There's a group of what you call fast money or surgical money that'll move from one area to another. It's moving from Mag 7 into MDY, IWM, mid cap, small caps, and these other guys. All right, so anyway, that's Meta. Watch the 200-day. Now, if you go to Amazon, it's doing just fine. It had a really nice update here. It looks like it wants to go back and challenge that 258 area. Nvidia, the laggard, you could say, well, it's rolling over. It's holding the 100. It's fine. I think support's going to be down here. If Nvidia takes another week or two to get there, you could watch this 200-day start coming up here and acting as more support. But it's gone nowhere since September, and it's at all-time highs. This is base building. A bear will say it's clearly topping. There's a head and shoulders, a double top here, head, left shoulder, possibly right shoulder. I get it, but it's still not going down, and the market's still going up. Now, if we take a look at Apple, it's also rolling over, and it is right on its 100-day moving average. If Apple closes below Friday's low from a technical perspective, I don't know that this little swing low can hold. I would probably say you're going to come down. I mean, the 200-day is going to get it. Yeah, I would just say 200-day. Look at Apple going down, but other stuff going up. Gold and other precious metals, commodities are attracting capital as well. They're taking a break from some of these. Let's take a look at Netflix. So Netflix is a seasonally bullish stock that it's soon going to come into play. Let me just bring this over from Financhill. Let me get rid of that. I mean, 23 years of data on Netflix. This thing does just go up over time. You can see lower left, upper right, pretty crazy. But the best period, the 13-week period to hold Tesla in 23 years, it has only lost 1 year. Just look at the green. That green money line is when the stock has actually made the most money of any 3-month window of the entire year. Not only that, you're operating at a 95% track record. You just don't see that often. Now, the key here and the risk, the gamble, is it's also tied around that dollar sign, which is an earnings report. And in order to, quote, follow seasonality, you would be long in front of earnings. And we all know as traders how that plays out. You know that one time you do that, it is going down hard. I get it, but we could also wait till after earnings. The stock does pop, and it still does move higher historically. So it becomes one of those risk assessments as a trader that you think about. Pre-earnings, do I put maybe part of the position on and see what happens? Or do I just play it safe, protect capital, and you wait till after earnings? But historically, we are about, let me see, when does this start here? Yeah, right there. Right at that earnings report. That is the launch point. So just keep an eye on that. We're not there yet on Netflix. And then if you were to look at Netflix, you can see we're still in a downtrend, and that earnings report is coming up according to Thinkorswim on the 20th, and they usually always report AMC after market close. Another one, two others here I've been getting asked about. Burlington. You guys know at Financhill, we talk about Burlington every year. Here is Burlington. It gapped down on earnings. The red phone is earnings, and now look where it is. If I bring you back to Financhill, what's just so interesting about this seasonality data, I mean, every time you try to say it doesn't seem to play out, it ends up playing out, it seems. 12 years of data on Burlington. Look over here. Look at the pivot. in the 23rd. Now, we do seasonality data by the week. We don't do it by the day because then you have single days as weekends, and it becomes a data integrity issue, if you ask me. So we do it by a week basis. The 23rd, where that week falls, look how the stock just goes vertical. And then if we do the best period, we actually trim it back to an 11-week period. 83% of the time in 12 years, the move's about 18.19%. You can see it. It's a really strong window. That window is now ending because if we go from this week forward, look where I'm doing now. I mean, Burlington's projected to close over the next 7 weeks by only 2%, 1.91%. There really is no movement. Therefore, understanding what the seasonality data is on Burlington, if you guys are following it, of course, in a virtual paper trading account, because I'm not a licensed financial advisor, I realized I didn't show the disclaimer slide, which, frankly, if I didn't, I'm going to show it now just to be safe. And I'm actually going to interject and just stop this because I was on such a roll. Please always keep in mind, everything is for educational purposes only, not advice to buy or sell. I am not a licensed financial advisor. I cannot tell you what to do with real money. Past performance, no guarantee of future performance. It's an important disclaimer, but I was so rip-roaring to go, I may have forgot it because I had to restart this a couple times because my 5-year-old keeps knocking on the door. Anyway, back to Burlington. If we go and look at, I'm going to go get it again. Hang on. If we look at Burlington, that liftoff point is the week of the 23rd in October. Now, what I'm trying to say here is, if we go to October, which is right around here, this is the week it usually runs, and it did start to run. Then you had earnings, and it goes from like 295 as low as 241, and now you're at 310, 315, 305 on Friday. Burlington is at the end of its seasonal window. So whether you bought in October because you follow the seasonality chart at Financhill in your virtual account, you're from 250, 260 to 300. That's not a bad gain, 15, 20%. If you bought the day before earnings, you're still up 20, 30 bucks a share. If you bought the day after earnings and you said, they dropped it, now I want to go get it, you're still up 60 bucks, 50 bucks a share. In all scenarios here, there's a winner following seasonality, but this is the point you would want to exit. That was Burlington. Oh, and the other one is AMCR that I keep getting asked about. This one, it went up on fire right away. AMCR, 8 years of data, right around the middle of December. It's a launch point, and it continues into the February report. Not bad. If you take a look at AMCR, December 18th-ish is the launch point. Right there's the 17th. Literally, it was days before the launch point. So this thing has gone from $37, $38 to now $53. It is definitely overextended. Not a bad idea to consider locking in virtual profits at this point. Really nice move, but it actually continues on into February. So those are 2 requests I had. Other stuff I had was EEM, emerging markets. These guys just broke out. And if you go and look at max weekly data, you are getting close to taking out all-time highs. So now even the emerging markets are perking up. They're gapping. They're moving. Volume is actually good. And then if you look at BABA, I had a question. To me, it's pretty clear. Once we got below the 50, we could not get above it. And the 50-day is in orange. So if you're watching Alibaba from a technical perspective, watch for a move above the 50-day. Then that would turn that chart bullish. Now, if we quickly move here, I got more here. How about the idea that they're now going to try to bring down interest rates, not just that way, but also with what the president said about using Fannie, Freddie, etc. And look what it did to some of the home builders. Look what TriPoint did on Friday. Actually, it's almost as if they knew it the day before because volume came in, and you go from 30 to 35 in 2 days. You go to Toll Brothers. It goes from 134, now you're at 145. These are only initial moves. I'm long some home builders using other stuff, but these guys are looking quite good. If you look at, how about Home Depot? 2-day gains. It was in the 340s, now you're at 370, and volume is picking up. These things are at the highs of the day. Typically, there's no guarantee. This means they want to keep going from that perspective. How about Costco? Now it's starting to pop. It's got above its 50. It's got above the 100. Once the 200 falls, then you start going here and here. How about Trex? After getting absolutely clobbered in November, consolidates for over a month, and now all of a sudden volume's picking up, pop. I would say the 100 days your target. coming in here. And how about Owens Corning? A 2-day pop. This thing was around 110. Now you're at 122, just like that. So they're going broad-based here and starting to buy these guys. Now moving on to gold and silver. Gold is staying above its 20. It's really not giving it back, despite them trying to do margin hikes to silver and gold and the usual shenanigans that they pull. This is still really bullish, and gold is in a seasonally bullish window. I am long gold as well. If you go to GDX, the miners breaking out. You go to silver. They've raised margins twice. They can't break this thing. Either they're going to come out and do it more middle of the night. I mean, I made a comment in one of the videos I did. I warned you about it. I said they're going to do it like 2:30 in the morning. I think the timestamp was 2:39 on that Sunday. Talk about it's. I only knew that because they did it back in 11. I would expect them to attack the silver markets again. The question is, will it work? So far, they knock it down, up, down, up, down, up. They cannot keep this thing down. Which, if they weren't going to try to quote unquote manipulate it, this thing is going to just. It would blow higher. This is so bullish, but what will they do next to try to stop it is the question. So just make sure you have stops in place. And then some individual miners like Agnico. After a month and a half, 2 months of nothing, this thing is breaking out. You go to Newmont, new highs. I mean, take your pick, really. They all look good and bullish at this point. So thank you for watching. Wish you guys a wonderful new year. And I'll show the disclaimer slide one more time since I forgot to mention it. Again, thanks again for watching, everybody. We'll see you next time.